Hi again, I'm David Maurice, fee-only certified financial planner for Worthwhile Wealth Counsel.
And I'm Andrew Worley, Associate Advisor here at Worthwhile Wealth Counsel. So, David, let's quickly go over what we saw this week in our market indexes, and then I have a bone to pick with you about our discussion last week with commodities.
Well, I'm looking forward to that, Andrew, so let's just go ahead and move on. The Dow gained some really nice traction last week of over 4%, and then we have small growth and small value once again. Almost over 7% for small growth and over 8% for small value. I'd be happy with those returns for any year, much less 1 week.
Next in line, it was our mid-growth and value, up respectively 4% and almost 5%.
And REITs were up, both for U.S. and foreign. Andrew, we look at both of those because, as everybody knows, real estate is about location. So in both cases, here in the U.S. and foreign, we're up.
And then we have bonds. We're now calling our bonds battered bonds because they are now in the negative.
Well, except for high yield, Andrew, which has been up most of the time, but is now just barely poking its nose above the ground at about 0.5%.
Well, I believe that pretty much covers this past week for the benchmarks we watched. So let's go back to our discussion about commodities. Now, last week, you really beat up on them, but I did some research and found that for all the years that you named where they were down so low, there was just as many years where returns were in the sky. A few examples: in 02, they were up 32%, 03, up 20%, 04, up 17%, and 05 were over 25%. Now, what's wrong with those returns?
Well, there's certainly nothing wrong with those returns, Andrew. Anybody would be happy with those. So maybe I was just a little bit hard on them. So to be fair, commodities are one of the most volatile asset classes we use. But those extreme swings from high to low mixed in with the other asset classes reduces the risk in the portfolio. And you know what's really cool about that, Andrew, is it does this without giving up any returns.
That's exactly what I found. There were many years in the deepest downturns that commodities were one of the few asset classes that gained value in a diversified portfolio, which of course provided shopping money to buy into those other classes that were on sale. Buy low, sell high.
Yes, so my apologies to commodities and to you, Andrew. They are extremely volatile and one of the most unpredictable asset classes. However, if you look back, you'll find that in many downturns they were skyrocketing when everything else in the market was upside down. So it's always nice to have something right side up.
Which is why I've heard you say many times that a portfolio without commodities would be like a football team without a defense. So I'm glad we had this clarifying conversation as to why we have a sprinkling of commodities in all of our portfolios. Well, that's it for this week. And as always, I'm Picky.
And I'm Petty.
And we're the Picky Pedants of Worthwhile Wealth Counsel.